When I first discovered the stock market, it was easy to say love at first sight. I spent the last 3 years studying economics and everything to do with trading that I could get my hands on. It's become my dream to basically be a professional trader. I scraped together a little bit of money in order to try and make this happen. You can see that balance over here. Unfortunately, if I'm going to make it as a professional trader, it's going to take a heck of a lot more money than that. The question is, how much more money? Well, given that the cost of minimum, or given that minimum wage is $15 an hour, if you worked a minimum wage job 52 weeks a year, you would take home about $31,200 a year. Well, being a trader, you don't have the same exact 52 weeks as usual. Instead, you have about 252 trading weeks a year. So we take our 252 trading days a year. So you take $31,200, divide it by 252 trading days a year, and I need to be able to generate that much money right there, about $125 a day. Now, I'm chronicling this journey, and I'm writing about it here. Welcome to the Russell Journal. I'm Russell, and this is my journal entry for today, Wednesday, November 2nd, 2022. Today in the market, we had quite a bit of stuff happen, mostly FOMC meeting. We got from Jerome Powell came in, gave the speech, and the Fed is, as we knew, going to raise 75 basis points. As far as what the market was concerned and what we've talked about on this channel is not so much are we going to get 75 basis points or not, but how many more of those are we going to get? Right now, as of today's FOMC meeting, they raised the targeted Fed funds rate to between 3.75 and 4%. And they are considering the fact that they will probably have to do another rate hike of this nature in December. Now, if you watch any of the other YouTube economists, most of them will say that the Fed has gone too far too fast at this point, and now we are looking for the market to break. I don't know if any of that's true. As far as I know, historically, even 4% interest rates are pretty low. And they were already really, really low. When they were basically at zero, that is the historical low. And as Powell did say, in the event that they do break something, which that's what they're trying to do, in the event that they do break something, which they have to, right? They have to make people stop spending money. So they have to break something. They break the housing market, they break the retail sector. They have to break something in order to get all of us to stop spending our hard-earned dollars. The week that you don't go drink at Starbucks or eat out or do something that everybody finally decides to stay home and eat cup of noodle is the week that inflation finally starts to die. But until something is absolutely broken in this economy, the Fed has to keep going. Now, interest rates are going to be about 4% as of right now. And inflation rate, as our last CPI data, core inflation is at 6.6%. Something you should keep in mind is there has never been a time that inflation has gone down with the Fed funds rate below inflation. Now, what they're hoping is that as they raise interest rates, inflation will come down and they will meet each other at some point. We have not apparently gotten there yet, and Powell has cited many, many reasons as to why this is and things of that nature. You can go watch that FOMC meeting on YouTube. I'll actually put a link to it sometime in the description of this video in case you're interested. All right. So what does that mean for me and how I did, especially given my $125 goal per day? Well, trying to achieve $125 a day with only $700 is a pretty taxing. That's a hard thing to do. To be honest with you, if I did that and I did it just with a simple strategy, is just going long at the right time or going short at the right time, I would be worth pretty much billions of dollars. People would throw all sorts of money at me. And I'm really not that good. So what I've invented, or what I'm coming up with, is a strategy that I've called the infinite trade, okay? And the idea is that we would take a counter trend position and we would put that way far out of the money because it will be cheaper, and we'll play it long dated. And then we are safe at that point to play the trend against our counter trend position. So today was awesome day. I wish I could really show you how the numbers worked in the account. But essentially what we did is we bought this, we bought this put right over here, or this call right over here, strike price 402, in the event that something happened and we went straight to the moon. Now, I had a thesis why that could possibly happen, given momentum on the monthly chart and the weekly chart and some of the other things. But as far as I knew, and there are some things, some trades, some plays that are going to come into place here. We have corporate buybacks that are starting. We do have some guys who are really going to want to try and short squeeze this market. You have a lot of stuff. But in the meantime, you've kind of got investors that, and as you can see from the chart behind me, from this chart right over here, there we go. Ooh, okay. So you can see from this chart over here, the move down we got today shows that there are investors and money managers and shorts trying to sell this market down, okay? They have some more stuff to price in. Now, I don't know how much worse it can get. I really don't. We've all known that these two hikes were coming, and the market got down to, basically a 4-year moving average at the 200 week. So, I mean, how many more rate hikes can you see? I mean, at the best, at the worst, right? Fed funds rate goes to 5%. Well, we already know there's a pretty good chance there's a 75 basis point rate hike coming, and that only leaves room for another 50 points. So, how far down will it go? I don't know. But honestly, it can't be that much further. You've really got to be coming into some type of transition here into things. And especially if you're going to hope for the soft landing approach, which is really the only, that's the only bull thesis you have left, is that you have enough jobs created out there right now that people who do get laid off, well, they will find a new job very quickly, and that, things aren't going to break too badly. Sales could take a hit. Companies are sitting on top of record profits, record money, all sorts of that stuff right now. So the company's not going to go underwater, most of them are, look, I hate Facebook. I hate Meta, and their stock is tanking, and I legitimately will tell you, I don't think that, I don't think they're going to do very well, but they're not going to go out of business, right? They might downsize quite a bit, but, all of that. So let's go ahead and go to the daily chart and take a look and see what transpired on SPY. It was really a rocky day in the market for but FOMC always is. All right, as you can see here, our slow stochastic. All right, so our trend is still up for the month. Was up, right? And here, right over here, you can see where we closed below this point here at 378. You have now, the trend is gone, okay? Your bull trend is gone. You officially have no trend, okay? So you have a pattern of a higher high. Oh, let me come back over here. You have this higher high up here around 390, and now you have a lower low, breaking below this previous one back over here at 378. You're closing down here at 374, and as you can see, you lost the embedded reading, right? And these are the things I told you on, I talked about on Monday when I said, hey, this is going to happen, it's going to be rocket ride, it's going to be incredible, right? I said, but I will know I'm wrong if you lose that, okay? So we were wrong. The good news is we hedged puts against our call position, and now that call is pretty much paid for. So any point that I get a bounce in here in the next, 10 days, if there's a move up at all in the next 10 days, I'll be able to sell that put for more money, more premium, even though it's losing that much. Every dollar it comes back in premium is now profit that goes into my account. See, this is how this works. This is what makes it infinite. It doesn't matter if you're up or down, you can infinitely make money that way. And if you're trading a small account, the thing is the reason I want to figure this out and do this and figure out the statistics that, I got $700, right? I can cycle that premium, that $700 twice a day. So I can buy $1,400 worth of contracts a day at this point, okay? So if I'm wrong in one direction or wrong in the other direction, I have got to be able to maneuver. Well, I can't maneuver more than, if a contract costs me $350, I can only buy 2 of those contracts at a time, and I can only cycle those positions twice. And if I lose on those positions, that's going to make it even harder, right? So what I have to create is some type of system in which I can play both sides against the middle, okay? So that's kind of this idea behind the infinite trade. I don't know whether we can make $1,000 a day doing it at one contract against another, but what I do think is that we can set it up so we are making $125 a day, and then finding ways to scale that as the count grows, okay? So again, this contract we earned today input premium. We took on, I had 2 put trades. Well, the first one I sold for a gain of 360, for 160, and the second one I sold for a gain of 190. So that gave me a $350 win on this. But this contract cost me $350. So we just paid for the whole contract. So it can go to 0 and my account balance will still stay right near $700. And I'm free to continue to play against that for, I got 2 days left this week and 5 trading days next week before that expires. It's already paid for. I can hold it forever and my account isn't doing any worse, right? So I'm really free to move around. I've now taken a lot of the pain out of trading the market. So I'm really, really happy with it, okay? So here we go. Let's go back into this. All right, so your trend is now void. You have a higher high, lower low, okay? Now the cool thing is, in the next couple of days when we do get that bounce up here, right, we can cycle the position and we'll put on a new straddle, right? Because you don't know, there's 2 things you don't know about this, okay? When you void a trend, your trend is void, right? And so when you do that, the problem you have is you don't know whether your new trend is going to go in the down direction, whether you're simply going to get a corrective move and then continue back in a new trend in the upward direction, okay? So we don't actually know which way it's going to go, right? And we don't know, especially with the length of this, which way it's going to go, okay? So really what you want to do here is get to some low point and put on a put position and then counter trend against it as the way it goes. So, which is a whole nother bag of tricks that I didn't say. Okay, so as far as where we're at, you lost the bullish embedded reading in the momentum. You're going back to 372 right there at the 18-day moving average. That's where you're headed. Now, there's a pretty good chance that from that average you will get a bounce. If you slice straight through that average, look out below. You will be going way, way below, the 348 low, okay? So, but if we do get a bounce there at 372, which I fully expect you gap down there tonight, the futures will just drive you straight down there to 372. I think that is pretty much where you're headed. Below that, like I said, look out below that 18-day moving average. They'll target that lower Bollinger Band down here, okay? So as far as how we're going to trade this, again, we're going to continue to play put positions against that. We'll be looking for bounces to get short from here. A bounce off the 18-day moving average would definitely give us a place to put in a put position.
especially a long-term put position, and it might actually give us a point to where we can exit that call position for get some of our premium back on that, which is going to be awesome. So that's pretty much all I've got for you guys today. Thanks for checking out the show. The Russell Journal is written, edited, hosted by me, Russell Liss. We're produced by Social Media Shows. Our executive producer is Maria Pereza. Check out Social Media Shows. They will help you put on a show just like this. And until tomorrow, pretend I said some sort of catchphrase.